Is the housing market about to crash? Whether you're an investor, homeowner, or someone who's looking to get into real estate for the first time, this is probably the question that's in your mind. So today, that's what I'm going to talk about. Now, I'm not going to sit here and tell you I know exactly what's going to happen, because let's be real, nobody knows exactly what's going to happen. Nobody can tell the future. And if somebody does tell you that they know exactly what's going to happen in the market, then they're probably trying to sell you a course for a steep discount, 80% off for only $19.97. Or they're probably your annoying uncle that at the dinner table always wants to prove that they know everything. Obviously, we can't trust any of those people. Real estate is an investment, and like all investments, it carries risks. Prices can go up, prices can go down. Nobody knows exactly what's going to happen, and something crazy like maybe a sort of disease that shuts down entire countries may pop up and everything goes to crap, right? Nobody can be right all the time. The key is to be right more times than you're wrong. So let's look at what's happening right now and make a prediction of what's likely going to happen in the next couple of months. When we talk about a market crash, we're talking about the price of something dropping significantly. So before we talk about if there's going to be a housing market crash, we need to first understand what determines the price of a property. You see, real estate is very different from other assets like stocks or gold. When you want to know the price of a certain stock, all you need to do is grab your phone, open up a stock trading app like Robinhood, Webull, something like that. Search in exactly what you want, like let's say you want to know what the price of Apple is. You punch in Apple, hit search, click on the Apple ticker, and it brings you to something like this. You can see if you want to buy a share of Apple right now, it's $319. You can tell exactly what the price is at a given time. You can do something similar with gold. You can find out exactly how much an ounce of gold is worth at a given time. This is because these assets are highly liquid and each one is the same as the other. So one share of Apple is exactly the same as another share of Apple, or 1 ounce of gold is the same as another ounce of gold. And there's so many transactions happening every single day. Real estate, on the other hand, is not like this. Houses are always different from each other. Even if one developer built all the houses on the same block, all of them look the same, after 5 years, these houses can be drastically different. People could have made upgrades, the conditions can be different, and also even the time of year can affect how much a property sells for. You can have 2 identical houses, one selling in March and one selling in November. They would be 2 different prices. Each property sort of has a range of value. And also, properties don't exchange hands that often. Some people might buy a house and sell it after 3 years, or 5 years, 10 years. Some people don't even sell their house for 50 years. The number of transactions is much lower than stocks and gold. So real estate is not as liquid. Therefore, it's really hard to pinpoint the exact price of a property. An experienced investor or agent can tell you approximately how much a property is worth, the fair market value of that property. But the fair market value isn't always what a property sells for. The price of a property varies drastically depending on supply and demand. I said earlier that the same property selling in March and November would have different prices. That's because more people are looking to buy property in March than November. A lot of people don't want to move during the winter times. So demand is higher in spring than in winter. Demand being higher means higher prices. So the property selling in March is going to get a higher price than if it was sold in November. That being said, think about these scenarios. Say for instance, there are 10 houses on the same block that's being sold, and there's only one person trying to buy a house. What do you think is going to happen to the prices of the property in that situation? The buyer is in no rush to buy, so these properties sit on the market for a long time. And as they sit on the market, some sellers might get impatient. Maybe they're moving to a different state and they need to get rid of this house before moving. Maybe they're trying to buy a bigger house and they need to sell this one first so they can get the down payment to buy the larger house. A lot of things come up. So when something like this happens, prices tend to drop. Now let's reverse that situation. Say there's only one house in the neighborhood that's being sold right now, and there's 10 people who want to live there. There's one seller, 10 buyers. In a situation like that, a bidding war can actually erupt. So let's say there's an open house for that property and 10 people show up and 10 people all want to put in an offer. The asking price is $100,000. One person might give a full price offer right there. The next person really wants that house. They can up the offer to 105. 105, the next person wants it even more, 110. Prices go up when there's a lot of demand and no supply. This actually happens a lot. Last year, I was trying to buy a property that was listed for $709,000. This property was in a great area and at a very good price. The listing was uploaded at around 8 p.m. at night. The next morning, I was there at 7 o'clock in the morning. I was the first person in the door to take a look at the house. I knew this house was a winner, so I put in full price offer right there. Within the next day or two, I followed up with the agent and found out there were 15 offers on that property in 2 days. I then immediately raised my offer of $50,000. At $759,000, I still felt that that property was a good deal. Well, unfortunately, I didn't get the property because it was bid up to $850,000. It was well over $100,000 above the asking price. And that's because that property was in a highly sought after neighborhood and so many people are trying to buy there, but there's no inventory. You maybe get 1 or 2 houses being listed in that neighborhood every single year. So now that we know supply and demand plays a huge role in the price of real estate, what impacts supply and demand? I think there are 3 key things right now that have a huge impact on supply and demand. First is the unemployment. Second is banks raising their lending requirements. Third is fear. Because of the country shutting down, unemployment is at its highest in decades. It's at nearly 15%. What do you think that does to the amount of people that are looking to buy a property right now? People who are looking to buy their property right now might not be able to afford that property anymore. If they're unemployed, then they might not have the income to afford their mortgage. Investors are also worried because when there's a higher unemployment rate, that means more and more people can't afford to pay their rents. And if more and more people can't pay their rents, then investors will have a hard time finding qualified tenants to fill their properties. This decreases the amount of people on the market right now looking to purchase a property. The second thing is banks have tightened their lending requirements. Chase, for example, has raised their credit score threshold up to 700 and also their down payment minimum to 20%. That means a lot of people who were looking to purchase a property with a 650 credit score might have a hard time getting a mortgage right now. Or if somebody was planning to put a 10% down payment, they don't qualify anymore either. I've even heard lenders are asking for very recent pay stubs. In the past, when you go get a pre-approval, the mortgage banker will ask you for maybe 2 or 3 months of pay stubs when you're applying for the mortgage. Now they're asking for pay stubs 2 weeks before the closing date to make sure you're still employed at the time of closing. If you think about it, all of this stuff kind of makes sense because Chase is a business. They give you a mortgage and they expect you to pay back that loan. They're trying to make money here, so they want to make sure that they're going to get paid. In these times when a lot of people are losing their jobs, they're raising their requirements to decrease their own risk. This also drastically decreases the amount of people who are looking to purchase a property. Lastly, fear. Fear of a crash, fear of uncertainty, fear of Rona. A lot of people are canceling their deals and just not looking to buy anymore. If people are afraid that prices are going to drop, why would they buy right now just to lose 10% in a couple months, right? Or if they're afraid they're going to lose their job, they're not going to buy a property, be locked down to a mortgage, and then run the risk of not being able to pay that mortgage. A lot of people are also afraid to meet people to look at properties. So where does that leave us? This leaves us with a drastic decline in demand. And when there's a decline in demand, prices are going to drop. Now, do I think it's going to crash? Probably not. A lot of people are comparing what's happening now to the housing market crash of 2008, where property prices dropped by 30%. But today and 2008 are completely different. In 2008, the housing market crash was directly related to real estate. People thought that the housing market was just going to go up and up and up forever, and there was no way it was going to crash. So what's the best investment? Obviously an investment where there's no chance of you losing money, right? So at the time, people thought anything backed by real estate was a sure win. Obviously, people were very wrong. There was such a high demand for mortgage-backed security, so banks needed to get more of them. Well, how did they get more of them? Issue more mortgages. People were being issued mortgages that there was no way they can afford. They were taking short-term loans where once the loan was over, there was a huge balloon payment. Or taking mortgages where the interest rate is low for the first 2 years and then it doubles after that. There were even mortgages where you paid less than the interest, so the equity in your property just decreased over time. But people just didn't care. They were thinking, oh, let me buy it right now. In 5 years, the property is going to be double the price. It doesn't matter if I'm paying for some interest right now. I'll just sell it in 5 years and make a ton of money. So since so many people were trying to buy real estate, the demand skyrocketed, and so did the prices, up to a point where the market couldn't sustain it anymore. And when that happened, everything came tumbling down. People had mortgages that were larger than the value of their properties. They had monthly payments that there was no way they can afford. So all of those people were forced to sell their properties. So with demand dropping and supply increasing, that was just the perfect storm for prices to just plummet. Thankfully, that's not the same situation that we have today. Banks are not just recklessly handing out mortgages to people, and as I said before, they're actually even increasing their lending requirements so that this doesn't happen. A lot of people are losing their jobs, so there will be some foreclosures and bank-owned properties hitting the market, but it's not going to be nearly as widespread as 2008. I don't think in the next 2 or 3 months, the economy is just going to pick up and we're going to be back exactly where we were before this whole mess happened. Some large companies are declaring bankruptcy, some small businesses can't afford to open back up, so things will definitely not go back to normal in the short term. It might take a year, 2 years, who knows, to get back to normal. But I definitely don't expect something like a 30 to 50% drop. If you're in good financial standings, meaning you have money saved up for a down payment and you have a great credit score, the next couple of months will be a great buying opportunity. You'll probably be able to get something at a great discount. So yeah, that being said, these are my predictions on what's going to happen in the real estate market in the next couple of months. But yeah, take everything I've said at face value because, well, I'm just some random dude on YouTube, but also because with all the new policies coming out, everything can change in a day. Just look at what happened with the stock market. We had a crash, the Fed started buying stocks, and we're pretty much back to pre-crash levels. We're not exactly there, but we're getting really close. The same thing can happen to real estate. If the government sees that real estate prices are dropping too fast, a similar bailout can happen and we get right back up there. So we're just gonna have to wait and see what happens. If you want to see more updates and future content on real estate, please hit the subscribe button. And if you've enjoyed this video, please give me a thumbs up and show some love in the comment section below. Anyway, that's it from me. Have a good day, guys.